when we set out to create Cobalt27, we were thinking about how do you capture that disruption as an investor? Like, what is the best way? And what we realized was it's tremendously challenging because while we can all agree that these changes are coming and you can't really stop them, what we weren't able to kind of nail down was how do you play? Like, do you buy Tesla stock? I don't know. Maybe actually Ford is going to be the winner. Potentially Beijing Auto. Like, I don't know. Maybe you should buy NVIDIA, the chip maker. Maybe you buy one of the sensor makers. And then we realized something, which is so long as you believe that there's going to be a winner, so long as you believe that there are going to be electric vehicles sold, the winner is actually basic materials. And the reason is because every single electric vehicle, every single hybrid is going to have a battery. And that battery is a lithium-ion battery that has lithium, nickel, cobalt, manganese, these basic materials. And so we set out to create a proxy for the adoption of the electric vehicle, the disruption of the energy industry, and that proxy is really Cobalt27.
Okay, so I think there's a general acceptance that people are moving towards electric vehicles, batteries, whatever they do, storage for homes, businesses, etc.
Like Tesla Powerwall.
It's all coming down the line, and there's a lot of information in the marketplace about that. So tell me a little bit about your strategy, because a lot of companies come to us without a business plan.
Yeah.
They have no written business plan, which surprises me, having worked outside of this space. So tell me a bit about your strategy and why you think that's going to give you the edge.
Yeah, so it's very simple. We have copied, in a way, Franco Nevada or Wheaton Precious' business model, which is streams and royalties. We are not miners. We go out and we seek to do streams and royalties with world-class partners. So if you look at the first cobalt stream ever done, we did with Vale. So Vale is a world-class mining operation, right? So they're the operator of the mine. If you look at a transaction that we're in the process of closing, it's a nickel cobalt mine, once again in operation. MCC is the operator. So the business model is very similar to the Francos and Wheatons of the world who focus on precious metals. But what we've said is we're going to replicate that business model, but focus on the battery metals, particular nickel and cobalt, that are absolutely critical to the lithium-ion battery.
But you also have some physical product as well, I notice, and some interest in other battery metals as well. So it's not a sort of pure royalty play, is it?
No, I mean, you have to kind of play the hand you've been dealt, as it were, and because of the specialty nature of cobalt and nickel, we had to be a bit creative. And when we launched the company, we actually launched with approximately 2,000 metric tons of cobalt, and then we bought another 900 tons subsequently, a few months after launch.
Why do that? What are you doing? Hedging?
Well, no. So that was the foundation of the balance sheet. So when you have a physical commodity like that, you can actually take leverage. Right. And in the early days, we wanted to build the balance sheet so that we could do the subsequent transactions, like the acquisition of the royalty on Voisey's Bay or the Dumont royalty. So that was really a strategy around building a balance sheet.
So how does that work? You're leveraging that. Why wouldn't you just sell that into the market?
So we haven't used leverage to this point. However, we have a credit facility available to actually leverage it.
There's a couple $100 million.
Yeah, exactly. So why don't we sell it? I think one of the things, so I've talked briefly about the fact that we've replicated the Franco Nevada model. I think one differentiated aspect of our business is we're creating an ethically sourced supply chain. So everything we do is outside of the Congo. And we can talk about it later, but there are a lot of issues around conflict minerals with cobalt in the Congo. And so one of the things in having this physical cobalt position, having the Voisey's Bay stream, you have flow of material, as it were, which is all outside of the Congo. So at some future date, if a battery maker, an automobile maker wants to step in and actually take that material, it's another available source. So we sort of see ourselves, in addition to copying the streaming and royalty model, we're actually creating a conflict-free supply chain outside of the Congo.
Okay, I was going to ask you about this later, actually. So explain to people what's going on in the DRC, which makes that problematic for you as an ethical sourcer.
Yeah, so to be very clear, we have zero investments in the Congo, and we've told everyone categorically that we're not going to invest there. That's a very important point.
Right.
But what's going on there is very straightforward. Some of the highest grade copper Some of the highest grade ores actually sit inside of the Congo. And what happened, and has happened for cassiterite, which is tin, and a bunch of other materials over the course of the last 20 years, is that when a given basic material's price gets sufficiently high, it's actually economic for literally an individual to go out there with a shovel, dig up the ore, and put it in a sack and sell it, right? And so, what happened, and has been happening for a long time with cobalt in particular, but a bunch of other metals have suffered the same fate, including copper and cassiterite and tantalum, and is that in these situations where they're very poor, people bring their kids along, and so you have people who are missing school, or you have a family member, a friend who's kind of having this child who might be 10, 12. I think there's some great Wall Street Journal reporting on this, and Global Witness has reported on this. They're having these children out there digging this ore that's ultimately getting put into the supply chain. Where we come in is we're saying, look, we can't fix that problem. I believe people can fix that problem, but we're not unable to fix that problem. And so what we're offering is a product where none of our material touches any of that supply chain. And what we think is, the early adopters of electric vehicles, in particular in like the US and Canada and Europe, I think they're green individuals. Like they care about the environment, and so I think that they care about the supply chain of the materials that comprise that electric vehicle, and they want to know that that their new, name the name of the car, is actually not having conflict cobalt inside of it.
Is this a marketing thing? I mean, are we saying that these companies will find it easier to market a green product?
It's ethical. I know it's ethical.
I know it's ethical, but there's a kind of balance between is it a gimmick for marketers, or is it a genuine concern for these countries?
I think in the companies. I think it's also a legal concern. I mean, if you're there are Sarbanes-Oxley. There are laws like in the U.S. I'm familiar with.
Right.
You can't be like. You can be selling a product with known conflict materials. I mean, so you run into legal issues. So I think it's twofold. I think there's just an ethical issue, but I think there's also a legal issue. And look, I do believe that with time, companies are thinking about ways with blockchain and different technology to bag and tag, which is what they did with tin. Meaning, you go all the way back to the source, you put it into a bag that you can verify, and then they put a barcode on it. None of these systems are perfect, but none of them properly exist for cobalt yet.
So, you say they're not perfect. So who measures or monitors what is and is not ethical? And you say
so it doesn't exist. I mean, really. I mean, I think if you're a cathode maker, a battery maker, an automobile maker, at the moment, what you do is you buy directly from large mechanized miners. So you buy from a Glencore or a Vale, because I do believe that those companies are able to look through the supply chain. Right. But I think there's only so much cobalt that's produced by those companies.
Right.
And so as soon as you step into like an aggregator, I think you start to enter a pretty murky space, which we're completely avoiding. And people are making efforts to clean it up. It just will take time.
In Congo.
Well, what they're doing is they're trying to create tracking systems. There's a couple companies trying with blockchain technology to really be able to demonstrate that we're talking about cobalt, but this could be true of any of the materials. Like, look, okay, here's your car, and by the way, here's the manifest, and the cobalt came from here, and it's sort of ethically sourced. But it's a very complex issue, and I'll give you an example. Sure. If you're a refiner or a processor, and you have 15 sources of cobalt, 14 of them may be legitimate, but if the 15 one isn't, it all gets mixed up, and it taints the whole, and the LME, by the way, the London Metals Exchange, they've announced that they're taking steps to try to look back into the supply chain, and so I think people are aware of the issue. It's just very complex, and it's not going to be something that's just sorted out, like that. It's going to take years.
Yeah. Well, and I guess in the meantime, there's always going to be a market for what you're determining is, and others are determining as unethical or not green.
Well, I mean, there's always going to be there will be that market, but I can tell you we spend a lot of time in China. I was in Beijing last week, and there's this kind of idea that the Chinese don't care, and I think that's completely false. Like I can tell you, like we were with a lot of major automakers, battery makers. They're acutely aware of this problem as well,
Right.
and they care also. I mean, they in China, and we can talk about this. China is really setting environmental policy globally around the adoption of the electric vehicle. The intention there is ultimately not to sell you a battery, but to sell you a car. So you're driving your Beijing auto car in London. Like that's going to be the future, but setting that aside. So they're acutely aware of this problem. And I can tell you that, the Chinese consumers who are making these electric vehicles, they don't want to buy this stuff either. And so the problem isn't like, it's a global problem, I guess is what I'm getting at.
Yeah, I think that's, and we can probably come on to China later because they seem to be leading from the front certainly in the battery space at the moment. So tell me a little bit about you. You come from a financial background. I think you position this as a financial play, what you've constructed here. So tell us a bit about you, how that's informed your thinking and the strategy of the business.
Yeah, so I've spent my career primarily as a resource investor, investing primarily in metals and mining, but also oil and gas to a lesser extent, in Europe and New York. And it has highly informed the business because we really are taking like a risk-adjusted return portfolio approach. We try to dilute concentration risk. We have multiple royalties across a number of jurisdictions.
But all battery metals related?
All really at the moment nickel and cobalt related.
Just those two. Would you really be looking at the other battery metals as well?
Look, I think our investors are primarily interested in that class 1 nickel that goes directly into the chemical industry and cobalt. And so that's the focus. I mean, there are lithium miners, so you can actually go buy a lithium company. Yeah. And by the way, there are actually a lot of copper miners as well. But cobalt as a byproduct is very hard to invest in. In fact, I don't think there's any real legitimate way.
Right.
And then, the kind of nickel that goes into batteries, once again, it's a harder play. And so we have that focus. And then within that focus, we have this portfolio approach of multiple royalties and streams across multiple jurisdictions. And so in a lot of ways, it's kind of trying to, kind of diversify risk such that if one asset, something happened, you sort of don't cause a cataclysmic problem for the business.
So tell me about, royalties is an interesting space. There's not that many players in it. How do you, as an investor in the space, this is a financial product for you, do you have any say in what the company's doing, or are you just looking at the balance sheets each week and going, it's working,
there are each one of the great things about the product is very bespoke. So each royalty or stream is addressing a specific concern, a specific situation for that company. But one of the reasons I think why the companies like it is you're not running their business. Yeah. Right? Like this is their business.
But do you have a say in it?
You definitely don't have a say, but the structure is such that you do have protections. I mean, you have minimum throughput.
Right.
You're covering, the entire mine. Because like if you, just as by way of example, if you just focused on a little area, you could create an incentive to mine a different part of the mine. So you structure the contract. And remember, the industry's been around for over a decade now. And so people have kind of learned from some of the early mistakes. Sure. But what I would say is you're definitely not operating that business. And through the structuring of the contract, you have protections. Right. But it's a very hands-off, light touch approach.
So the hard work for you is determining which companies to invest in and structuring the agreement.
Yeah, and also getting them interested, because when you're dealing with a counterparty that is potentially a large miner, there has to be a reason why they want to do it as well.
If they're producing, they've got options, and it's a question of what's the cost
of capital.
Of them,
Exactly.
All of that kind of good stuff. So what do you spend your time doing then? If you're sitting back looking at numbers, what's your time spent on doing? Are you looking at M&A opportunities constantly?
Yeah, so we have a list of probably almost every single nickel and cobalt project in the world. Legit, like it's an Excel document. Right. And we track very closely the life cycle, where the companies are at, and then we have kind of a short list of situations. Companies that you may not even realize, I won't say them publicly, but companies that you may not even realize produce nickel or cobalt, and maybe there's a capital expansion announced. Or they're fixing the refinery. You say, well, hold on a second. Yeah. They don't even show that there's nickel there, but we know there is, so they're getting no credit for that nickel. So what if we come to them and say, here's $100 million, just by way of example. Sure. And then there would be other companies that would be moving along the development kind of timeline. And then there'd be divestitures, and maybe a company's buying another company and they need asset finance, and so they're really buying a nickel project. So there's all these different situations, and we monitor them.